Episode 15 of our PerFinEx community investing is a spin-off of Sober October called Rollercoaster October. I know it doesn't rhyme that well, but we tried. The markets have been an absolute roller coaster over the last months, going up and down. In conclusion, more down than up this year. That's why many people have been asking if it is finally the right time to start investing now, because every roller coaster has got to have an end somewhen. Let's see if you should start investing in this episode of the PerFinEx community investing, as well as the October development of our 3 investing strategies. Attention investors, we did some slight changes to all different investing strategies in order to have a better diversification as soon as the market recovers. So please log into your Fidelity investment account and accept the order proposal or order proposals that we sent you. Some of you guys received 2 order proposals. If you do, you will have the new slightly different portfolio distribution that we find better suited to what is happening in the markets. If you don't accept the order proposal, everything will stay in the old portfolio distribution. And now, back to the roller coaster. Because of the roller coaster, many people have been asking us if now is the right time to start investing. We don't have a glass ball. As always, there's arguments for both sides. So this slide will hopefully help you to make up your own mind. Inflation again on a new high. I wish the stock market would rise higher and higher every month. Inflation in October is expected to be at 10.7%, an unbelievably high amount for the euro area. This is of course because of the high oil and gas prices that are around 40% inflation for a couple of months now. That high of an inflation is of course a big downer for investing, because it's not just taking money out of our consumers' pockets, it's also driving up manufacturing costs for companies. To fight the high inflation, the US Central Bank, Federal Reserve, increased their federal funds rate, that's what our European Central Bank calls key interest rate, to a maximum of 4%. That was a big increase again, and the US has the highest interest rate now since 2008. Why is that in the positive investing news, you might ask? Seeing that the euro area has a 10% inflation and the US has a 10% inflation, you might be thinking now that they should take the same measures to fight inflation. Wrong. Because the question is, why do we have high inflation and why does the US have high inflation? For us, it's mostly the energy prices that went up by 40%. Our economy is okay-ish. We just need to find a solution for the energy crisis and inflation will come back down. In the US, it's different. Their economy has been booming. It was hot and started to overheat, bringing prices up on an overall level. That's why central bankers are doing the absolute right thing when increasing the interest rate in the US, but not in the euro area. And that's why that is in the pro-investing news. Financial markets seem to understand what central bankers are doing, and I like it a lot. It's not often that financial markets like what central bankers are doing, so we gotta celebrate that one. Today is Thursday, one day before the release of this video, and markets opened up with a slight minus because of the interest rate hike. But nothing too out of the ordinary. Let's still put it in the negative news because the markets are red, even though it's just by 1 or 2%. A speculation from earlier this week was that China will end its zero COVID policy after more than 2 years. Apparently they introduced a committee that is supposed to figure out how measures can be relaxed and borders can be reopened again. Stock market loved it, especially the Chinese markets that were up 5% to 7% after the rumors got released. Of course, this would be good for every company that is producing something in China, so almost every company anyway. That were the monthly investing news, and now let's see how our different investing strategies have been doing in October. High safety investing strategy is almost green, just 0.03% in the minus this month. Man, if this strategy would have made it, we would have been positive in all 3 investing strategies. The slow recovery of the market in this investing strategy comes mostly from the 60-70% bonds. You will see that with the other investing strategies that have recovered quicker than this one. But in order to keep the risk classification of SRRI5 out of SRRI7, we have to invest that much in bonds. There's no other way. After the nice dividend of almost 55 euros for every 10,000 euro invested last month, there was another tremendous dividend in October, almost 6 euros. We'll see what's gonna happen in the bond market going forward. The new portfolio distribution should be a lot better than the old one. In last month's episode, we discussed the old stock market saying, sell in May and go away, but remember to come back in September. And ta-da! This month we have the first green chart again after months and months of all being red. Plus 0.3%. Feels good, man. Since the start of our community investing in August last year, we are still a little bit over 10% in the minus with this investing strategy pre-dividends. But man, that feels good to finally have some green charts again. After the 40 euro dividend for every 10,000 euro invested in October and the 20 euro dividend in September, what's the dividend in October to keep our streak going? 0, of course. 40, 20, 0. The passive income strategy pays a lot more reliable and a lot more stable dividends, but even here the ETFs take a break from paying dividends every 3 months. Maybe we'll include a dividend ETF in the next rebalancing that pays in the months the other ETFs don't. We'll see what happens. And last but certainly not least, our high return investing strategy that is finally also doing what it's supposed to do, delivering the highest returns out of the 3 different investing strategies. We also made some changes to this portfolio, so no matter which strategy you're investing in, please log into your Fidelity account and accept the order proposals. Overall minus, since the start in August last year, is a little over minus 15%. That hurts, but we've seen the returns of the global financial markets in the last episode of the community investing. So not pretty, but pretty good in comparison. Last episode we also discussed that we were expecting a small dividend in October and the ETFs delivered. After the 55 euro dividend in September, October paid an incredible 4 euro dividend for every 10,000 euro invested. Don't spend it all at once. If that got you excited and you want to start investing with us, you can open your free Fidelity investment account with a link in the description. It just takes a couple of minutes. After the registration is complete, you get immediately sent an email to do your post-ident or video ident in order to identify yourself to be compliant with German money laundering laws. And just a couple of days later, when Fidelity is done setting up your account, we will reach out to you to set up a meeting in order to discuss the right investing strategy for you. Maybe it's one of the 3 pre-given strategies, maybe something different. See you in the beginning of December and take care everybody.